Okay. And maybe along the lines of finding the right partner, again, maybe some businesses, they think of it, well, if I take on private equity, I'm selling, I don't want to do that. But I have, a significant portion of our family wealth is kind of tied up in this business. What are some things that the business owners can think about? What are maybe some things that have, from the advent of private credit or different sources of funding, how can you maybe help someone prepare for a different way to unlock value in their business?
100%. So I clearly like really cheesy metaphors, but I always say M&A is like the Cheesecake Factory menu. There's so many options, right? There really is. And it's really a function of trying to discern what your taste is. So if you really are vehemently opposed to someone taking a majority position in your business, okay, well, then let's look to other liquidity strategies. There's debt, there's growth equity, there's minority investment, there's all sorts of vehicles. We could sit here all day and talk about the different types. But I think it really all boils down to, what does success look like in the eye of the business and where it can go, but with the founder and its family or its key managers, where do they want to continue to take the business and who's best suited?
Hello there, M&A Advisor community. This is Roger Aguinaldo, and welcome back to the M&A Advisor podcast. Since 1998, the M&A Advisor's mission is to recognize achievements, provide thought leadership, and connect professionals in mergers and acquisitions for the purpose of improving your deal-making craft and accelerating your deal flow. We are so glad you're joining us for this insightful and inspiring podcast conversation curated for mergers and acquisitions professionals. Whether you're an aspiring deal maker, a seasoned professional, or just curious about the world of mergers and acquisitions, you'll find something valuable and relevant in our podcast. Our goal is to bring you the best insights, stories, and tips from the experts who've been there and done that, so you can learn from their successes and mistakes and take your deal making skills to the next level. But before we dive in today's episode, we have a small favor to ask you. If you enjoy listening to our podcast and find it useful, please consider following us on Spotify, Apple Podcasts, and YouTube, and subscribing to our M&A Alerts newsletter. You can find the links in the description below. This will help us reach more people like you and grow our community of M&A professionals. It will also let us know that you appreciate our work and want us to keep producing more quality content for you. Plus, you'll never miss an episode, and you'll always be in the loop with the latest trends in the M&A world to improve and accelerate your deal making. So please follow us. You are the reason we do what we do, and we couldn't do it without you. And now for today's podcast.
Thank you so much, Raj and Jack. So our next session is looking beyond the elected. It's the election, setting up your clients for success. And our speakers will be Dena Jalbert. She is the CEO and founder at Align Business Advisory Services, and she will be in conversation with John Moore, partner at PKF O'Connor Davies. Welcome.
Morning.
Good morning.
Good morning. A lot happening in the news today.
A little bit. It's a little busy out there.
Yeah, exactly. So as a sell side advisor to clients, what are you hearing? What are you telling your clients?
Get ready for the rush. I'm sure many in this room are feeling the same way we are. There's known of the unknown has finally, I guess, arrived. And so what that means is it's time to plan and strategize. So we're working with a lot of clients right now on prep and what does that look like, and what's your strategy for 2025 and beyond, and how do you want to take advantage of at least the perceived strength of what's coming.
Okay. And so I think we're going to spend a lot of time talking about the family business in transition. Maybe a lot were sitting on the sidelines trying to figure out what was going on, or just unsure about the election, but just from a planning perspective, have people or business owners have their mindsets changed now that the election's over? What are your clients telling you?
Yeah, what we see out of our clients is a large number who kind of held their breath over the last year. The tightening that had been going on in the broader macroeconomics had affected some results for them, and so they were like, we're just going to wait a few months and just wait to see what's going to happen with interest rates, wait to see what's going to happen with the election, see if my business rebounds as the year progresses, as we think it will. And so what has now happened as we sit here in the fourth quarter is all of those unknowns have come to fruition, as I was just kind of mentioning. And so what that means for a lot of our clients is I was on the fence before. I wasn't sure. I know I need to do something. Now's the time. So we've had a lot of organizations reach out to us and say, hey, can you help us make heads or tails of what our strategy should be? Because we work predominantly, 95% of our clients are founder and family owned businesses who've never taken in any institutional capital yet, but they know they want to in some form or fashion, but they don't exactly know what that means and they don't exactly know what that looks like. And so now that the areas of trepidation have cleared, they want to sit and put a plan together. And so that's what we've been seeing most recently and expect to continue, especially as the first quarter rolls around.
Yeah. And so we have a lot of business owners as clients of ours, as tax clients or accounting clients, advisory clients and whatnot. And so sometimes we're getting a call and, okay, I've heard from, I'm getting emails, I'm getting calls, people just showing up at my door in a way, with proverbial bags of money. How should clients kind of think about that, react to that, or how do you just educate your clients to just navigate through that sort of inundation of, people wanting to know more about their business?
Yeah, I always say when you start getting the phone calls, emails, LinkedIn messages, honing pigeons, all the things that are very creatively being used, the market's telling you something, right? So any of us, just kind of investing 101, want to, buy low, sell high type of thing. And so if your industry is one where there's a lot of demand and there's a lot of activity, you should probably pay attention, even if that may or may not line up with your personal timeline. And when you work with founder and family owned businesses, it is very much a personal timeline. You can't force that, despite the bag of money you might have in your hand. So what we see out of clients is, help me make heads or tails of what a right transaction would be for me so that I can look at the market objectively, find the right partner versus just saying, oh, hey, thanks for that call. That sounds interesting. That's a big dollar amount. But, what if that partner doesn't have the right resources to support growth of the business after the fact? Maybe they have a different thesis or view on the industry than you do. And not that either is right or wrong. It's just that they're different. So if you've got two owners who have different visions, that's probably not going to play out as well post-close. And so we work to really make sure that sellers have thought through what success looks like, that they understand what that means for them as individuals, as well as what the market has to offer. Because when you pair those two things together, that's when it's the right partner. So we, in preparation, help them think through that. What do you want as an individual? Are you going to stay on and help it grow, or do you want to roll off and retire? There's no wrong answer, but be honest with yourself about what that is. Because, I had one client say to me once, he said, I don't know, for any amount of money, I'll do a nickel. And I'm like, you just compared that to a prison sentence. Like, that's not good.
And like doing time for
Yeah.
that investors.
So, and I was like, listen, that, no matter how much money someone gives you, that's not going to feel good. And it's going to trickle into the business. It's not going to create value. And as our job as an intermediary is not just to transact for our clients, but it's also to create value in the industry. And if deals fall apart and that value doesn't accrete, then we're not doing our job the right way either. So it benefits, everyone.
Okay. And so maybe sticking on that theme of value when you're dealing with maybe the founder owned business, or maybe they're in the second generation or the third generation, there's a lot of, you said it's very personal. How do you kind of educate them or get them, thinking longer term, or getting, set up to really be able to position the business, to now have maybe a financial investor or financial buyer kind of going in there doing some analytics versus the way they've always sort of managed the business?
Yeah, for sure. First, I always say it takes a team of folks like ourselves, right? Service providers and advisors who can help them strategize on that value gap or where there are issues. Kind of do an assessment and an inventory of where the business is in terms of its infrastructure strength. I always compare it to, your house. Do you want to fix up the kitchen or do you not? I mean, that's overly simplistic. and kind of dumbs it down, but it's a way that they can appreciate like, oh, that makes sense, right? It can be tremendously more valuable, or you can lean on your partner to help you do that post close. Again, not a wrong answer either way. It's just which strategy best suits what you want to come out of it. And so these are questions you can't answer when you already have a letter of intent in your hand. So, working with folks like yourself and us and others in the room, they can start to think about what that is years before they do it. Start with the end in mind, plan ahead, always have data. And you have to think about it because when these are founder and family owned businesses, is your estate in order? Have you done tax strategy? Have you done generational wealth planning? Those are all things we can't do. I always say, we'll get you the deal and we'll get you the right deal, but what you do with it after that and how it's handled for yourself and your family and your employees has to be structured by very smart, people. And it's not by happenstance that those things take place. It takes planning.
Right. Yeah. No, there's certain things you can do immediately before the transaction, but a lot of that sort of gifting, estate planning, you want to have a gap in time between when you do those events and maybe when you transact. Otherwise, it gets very difficult to have a different value for, when you put something into an estate or into a trust versus actually transacting.
Yeah, and then there's just the good old fashioned, management accounting that most founder and family owned businesses don't appreciate, right? So what a lender needs to underwrite with and what a family uses to run their business with are two fundamentally distinctly different sets of financials, right? So we all know that. And helping them understand that in advance before it becomes an issue. I mean, I've seen so many deals retraded over, cash to accrual conversion and the seller's lack of understanding around what that is. And again, if they had good accounting advisors and folks in quality of earnings that can preempt that and that can, one, give them the education and two, help them understand the why, then it's not you're having to explain something. That translation takes place. I always say the business and the lender speak two different languages, but actually mean the same thing. They just don't realize it. So it takes a group of people to help come do that language translation in the middle to say, they're looking for a forecast of your pipeline. What work do you have coming? It's so silly, right? But
Yeah, sometimes it's all about the right terminology, the lexicon, everything like that many
yeah,
of us take for granted that just suddenly can make someone look like they're uninformed. But in
correct.
reality, they know their business.
And you and I talked earlier about perception equals reality. So if the perception is like, well, I don't know, it's not that they don't really know. They don't know what you meant by that. And it doesn't mean that they're unsophisticated. It's just how they've operated their business differently. A lot of the time, business owners just look at cash in the bank as the gauge of the health of the business, right, wrong, or indifferent. And I think a good problem to have is that the business generates a significant amount of cash flow and there's cash in the bank, and that's a good thing. But creating the predictability around it to be able and explaining the trend, and then also you have an intermingle of personal finances and you know and life that is in a lot of these family owned businesses that you have to unwind, and so it takes prep to do all of that.
Exactly. So, how about thinking about with the founder owned business and sometimes too maybe the founder or just the senior generation wanting to kind of stay on and control things. And, especially if it's going to be a financial buyer, right? They really want to understand who's going to be the management team, not only today, but when they're going to go, hopefully exit and stuff like that. How do you deal with that kind of conflict that can kind of inherently come up with the family business going through transition? How can you prepare?
Yeah, so we spend a lot of time talking to clients about, listen, you were an entrepreneur probably because you didn't work for others very well. Let's be honest, right? So we'll have those hard conversations because I think it's better to be upfront about that. And so what we start to talk about, like if an owner wants to stay on and help the business grow, perhaps you do it in a way that you get to do the things you like the most. So for example, a lot of our clientele don't want to be the platform CEO. If they're a platform investment and are going to be the first in a series of buy and build transactions, being a platform CEO is much different than running your family business as the leader. It's less operational. It's your meeting with your board, lenders, advisors, all of those things, growth through M&A, things that are traditionally not within the toolkit of these founders. So stay in your operational lane, but maybe pivot and focus on sales. I had a client once who he was adamant it was a family-owned business, and he's like, I want to be the CEO. And it's kind of like the Princess Bride. I'm like, I don't think it means what you think that means, right? And so we had a really deep conversation about it. He's like, nope, I'm adamant. His partners were like, you know what, we'll give him a shot. 6 months in, he called me. You were right. This is not what I want to do. And we pivoted. He became president and head of sales, and they grew 200% organically that year because that's where he needed to be. So when we talk to sellers about who's the right partner, we also look at the investment community and look at their infrastructure. Some funds have institutional operating partners and resources and experience to glean. Others, who might be independent sponsors or smaller family offices, or others may or may not have that institutional infrastructure. And again, it's not right or wrong, it's just different. So if someone is expecting their partner to come in and supplant and maybe take on some of that leadership for them, then we need to be looking for groups like that versus struggling through, oh, we'll find someone post-close or we'll recruit for someone post-close. Those are the types of things I meant earlier about trying to find the right partner.
Okay. And maybe along the lines of finding the right partner, again, maybe some businesses, they think of it, well, if I take on private equity, I'm selling, I don't want to do that. But I have, a significant portion of our family wealth is kind of tied up in this business. What are some things that the business owners can think about? What are maybe some things that have, from the advent of private credit or different sources of funding, how can you maybe help someone prepare for a different way to unlock value in their business?
100%. So I clearly like really cheesy metaphors, but I always say M&A is like the Cheesecake Factory menu. There's so many options, right? There really is. And it's really a function of trying to discern what your taste is. So if you really are vehemently opposed to someone taking a majority position in your business, okay, well then let's look to other liquidity strategies. There's debt, there's growth equity, there's minority investment, there's all sorts of vehicles. We could sit here all day and talk about the different types. But I think it really all boils down to, what does success look like in the eye of the business and where it can go, but with the founder and its family or its key managers, where do they want to continue to take the business and who's best suited, to do that. And then it's really, you're just kind of working in the inverse of saying, all right, well, who are the people best suited to do that? We're seeing, and actually within the last year, we've seen a lot more growth equity investments, those who want to take some, proverbial chips off the table, de-risk the business, de-risk their personal balance sheets, get some of that liquidity, as you mentioned, that's been tied up in the business versus just continuing to kind of run their life through it. COVID kind of taught a lot of owners that might be a wise thing to start looking to do, because the world is volatile, as the prior group panel before us was just articulating. So again, it goes back to planning and strategy. And then really you look at the menu and say, okay, what do we think are the best fits? How many of those folks are out there? What kind of terms are available? Let's see what the market has to offer.
Okay, got it. And are you seeing, I mean, everyone's kind of, I think we're all kind of bullish, optimistic about 2025 and just really kind of getting, we got past the election, maybe there's a little bit more certainty in terms of what's happening. Any particular sectors or industries, even, the family business can be a whole amalgamation of a lot of different things, but any highlights or themes you're starting to see?
Yeah, we're continuing to see service-based businesses, people-based businesses in demand. And ironically, we're seeing it span kind of cross sectors. So what I like to call from blue collar trade services to white collared services like insurance and financial services and accounting and management consulting. You and I were quipping earlier about how I think I've read of deals announced every day in the last week and a half in that financial services sector. Congrats, by the way.
Thanks.
And so we're seeing a lot of demand there. Why? Because broadly we are turning into a service-based lifestyle. Everything is done for us, through us, and on behalf of us. We're also seeing margin, a real focus on margin expansion. And the fastest way to do margin expansion is to outsource. So you see it in trades and construction and, everything from, we've all seen the articles about heating and air conditioning, plumbing, electrical, and the like, which we've been doing deals there for a very long time. But all the way to financial services, it's the same thing. It's all about margin extraction, economy of scale. buy and build hyperfragmentation. And so when you look at industries that tend to be consumed regionally, I think you're going to continue to see demand for those types of services. I think manufacturing and logistics will continue to be strong as well, because there's still consumer demand for things. COVID taught a lot of people to not have everything offshore. With the new administration, I think even more so with the talk of tariffs and kind of geopolitical volatility, potentially keeping all that onshore is going to be important. So those are the areas that we see most in demand, and I think will continue to fuel the rush that's coming in 25.
Yeah, no, that's great. I think a few people, the panelists, have talked about the tariffs and just, again, the importance of really understanding your supply chain, where everything's coming through. So we only have a couple of minutes left, but where do you think, where's the sort of the common kind of misstep or something like that you see the business owners or your clients kind of do, that you feel like if we just go back in time a little bit, would just change this one or two things?
How is he rushing into things? As we talk about what does the election mean, for M&A and how would we advise our clients to prep? They're getting all these phone calls. I think that pace is gonna, if my phone is any indication, I can only imagine downstream, because folks who don't want to necessarily have to have it banked. So if my phone is any indication, there's going to be a lot of demand, and with that will come a lot of, it's good to be opportunistic to a certain extent, but if you're opportunistic to a fault and don't think through what success looks like, I think you're going to see a lot of failed deals, bad terms, and regrets. I hate when we get a failed process or someone comes to us or I run into someone, I sold my business a few years ago and it was the worst experience I've ever had. I don't want to hear, those types of things. Because as I was using earlier, like, it's not a prison sentence. It should be the best and most exciting thing. You're monetizing your life's work. It shouldn't be daunting. So I would say don't rush into it. Don't just jump at that first phone call. Don't give your financials out willy-nilly. Have a plan.
No, that's great. That's great. And I think, some of the other panelists were sort of asking, I don't know, any sort of Trump stories or Trump interactions for you at all? And
no, I mean, I'm from Florida, so it's not, we're in Orlando. We have a team in Palm Beach. So there are some funny quips. I will say what we're most excited for in our crazy state is, I think, the regulatory landscape broadly. The state of Florida itself has been very pro-business and business friendly. That's going to continue. We see a lot of investors wanting to invest in businesses in that state, Florida and Texas being states that have significant population growth, which means back to that service economy. The more people there are to serve, and there's more demand across sectors. So that's going to continue. But I think the expansion of and lessening or opening up of the regulatory framework, the panel before us was talking about the Spirit JetBlue deal, and I couldn't agree more. That deal would have gone through had not for regulatory scrutiny. So I think you're going to see and so for us who are down market, we always look to where are things going to go up market in the longer term. Where does this buy and build go? So to see the larger deals in the regulatory framework open up is a positive thing, which again, I think is going to spur, more investment, and we can thank the new administration for that.
Right. Yeah. Additional momentum, more exit opportunities.
That's
So,
right.
Great.
That's right.
Great.
That's how we tell our clients what's that second bite and how are you going to monetize it.
Exactly. Well, thank you very much. Very
Thank you.
informative.
Appreciate it.
We hope you enjoyed this episode and learned something new from it. If you have any questions or comments for us or any of our guests, please feel free to leave them in the podcast platform of your choice or send us an email at editor@maadvisor.com. We would love to hear from you and get your feedback. And if you haven't done so already, please follow us on Spotify, Apple Podcasts, YouTube, and subscribe to our M&A Alerts newsletter at the links in the description or on our website at www.maadvisor.com. This will help you stay updated on the latest M&A interviews and trends and support our podcast to grow and reach more listeners like you. This is Roger Aguinaldo, the creator and founder of the M&A Advisor. Thank you for tuning in and being part of our M&A Advisor community. Until next time, stay safe and happy dealing.